Well, guys, my name's CJ. I am a real estate agent here in San Antonio, Texas. This is my friend Vance. I actually met him here in the neighborhood at a open house. And I reached out to, wait, did I reach out to you?
Yeah,
Or-
man. You
I-
came
yeah,
over,
okay,
came
yeah.
by doing some open houses.
Yeah,
here.
yeah. So you actually did something that I hadn't seen before, and that was
Oh, God.
a loan officer showing up to an open house just to educate people.
Boom.
And
Yep.
you posted it, and that's actually how we met
Gotta
here
do
on
it.
this neighborhood page. You said, "Hey, I'm going to be here at this open house. If you have any lending questions," and I'm like, "Well, I'm going to go check it out, man."
If you have
And
lending
so-
questions or nervous buyers,
or nervous buyers, this is a great
Every one of
place.
them.
So, man, I just want to thank you for joining me
No
here
problem,
in this
man. My
Facebook
pleasure.
Live, and dude, it's gonna be fun. It's gonna be great. There's a lot of questions that home buyers have. A lot of questions.
I'm aware.
And- and
Let's do it.
I don't have the answers to all the questions,
Me
unfortunately.
neither, but I can try.
You have more answers than I have for sure. But dude, why don't you introduce yourself? Tell us, who you
Okay.
are, what you did before lending, how you even got into lending. What?
Man, okay. So prior to this, like many young Americans, I watched 9/11 happen, didn't really understand it at the time, and then ended up doing my first year of college at Texas State. And someone sold me. They sold me on this concept of signing a contract and joining the United States Marine Corps. So I did that. And many years later, finally get out, finish college, did Iraq, Afghanistan, came back, tried to figure out where I fit in. Did property management for a while. So your typical guy at the front office, and then assistant manager, and then moving on up. And eventually I find myself being the guy in eviction court kicking out a family
Oh, man,
that,
dude.
that more than once. And it's like, am I the good guy? We all do that as human beings. You want to be the good guy, at least
Right.
most of us. So I'm like, am I the good guy? And I started questioning that. So I started looking at getting my real estate license, did all the coursework, and unfortunately, as y'all can probably tell from this broadcast, I'm not built for the limelight.
Oh no.
But I can do the computer stuff pretty well. And all my questions that I had in that real estate school, the answer was always, that's a question for your lender.
Oh man.
So at the end of it, I'm like, it sounds like I need to be a lender. I don't understand the plumbing and all foundation issues. That's not my jam. That's where we turn to you. And that's why it kills me when buyers like to go on a Sunday and sign for a new build without a realtor. Try to talk them out of that, because I'm going to be the one answering those questions. And I cannot answer those questions like you or another realtor can.
Right.
I can't do it. So I stick to my lane, which is financing. And that's where it all began. And now here we are, several years later, still doing it, seeing extreme lows for interest rates that we've never seen.
Yeah.
And now some swings left or right, which I'm sure we'll get into. And as a lender, you told me you're going to put me in the hot seat, and I guess I'm going to answer all the questions as if I'm the Fed and I'm the investors buying these interest rates and all the tranches.
And we did get some questions in, believe it or not. We got some
I bet,
questions
man.
in, and
I
so there was a few of your friends that actually submitted questions as well.
Fantastic.
They're like, we're going to put Vance in the hot seat. They're
Yeah,
like,
man.
all right.
Of course they would.
Let's do it, man. So that was just kind of your intro then, huh, to getting into lending, and you were originally wanting to be a realtor, an agent.
Yep.
And then you realized, hey, this, you know what? I should just stick to financing.
Yep.
When we do lending.
I'm sitting
and then
there in the
that's-
room with everyone that has personalities like yours. You guys are like alpha takeover wherever you are. And I'm like, I'm kind of the guy in the back with the computer. That's just my jam.
Yeah, and
So
you do a great job at it too.
make it work.
Yeah, man. Well, thanks for introducing yourself. But I'm going to start with, a question that some of my clients have.
Yeah.
Right. And so
We got.
I'm a first-time home buyer.
Okay.
I have decent credit. I have a job. My debt isn't too high. Where would be a good place to start if I say, hey, I want to just see how much I can even get approved for?
Dude, I mean, so the obvious answer that, like, I'd be kind of like asking Santa, should I be good or bad? Like, yeah, you should talk to a lender. But most people aren't going to do that. The human nature is to be like, this is a thought. This is something that I want. I want a house. I want this for my family. I never thought that it'd be possible. So they start researching online. Yeah. Everyone starts. They first log into Credit Karma and they log in and go, "Where's my credit at? I have no idea. Yeah. What are these things? Oh, dang! What is that thing on there? That a collection from an apartment that I moved out of 6 years ago. Is that gonna? You know what? Never mind. I don't even want a house. I'm just gonna re-sign my apartment lease for another year." That's what we don't want to happen.
Right.
So if you get someone to talk to a lender, me, anyone else out there, literally, than doing your own research online, they're going to come up with an actual plan.
Right.
So the first step, talk to a real lender. All these things that you're worried about, it is our job to find a way to make the loan, not to find a reason to deny it.
Right.
So there's a lot of unfounded fear that goes into being a first-time home buyer that you were at some point.
Yeah, absolutely.
I mean, what were you told whenever you first started applying? What was your first step?
Oh man, I applied and then I got denied, right? And at first I was a little ashamed to even share that, right? Like, and I didn't even get denied, right? They just said, "Hey, right now is not possible," right? And so I had two options. I could either just keep renting where I was renting. I was there for about 3 years at that point. So I could have kept renting, or I could have asked, "Hey, well, what do I need to do to get there?" And had I never applied for a loan, I would have never known what I had to do to get there. Yeah. And I got there, right? I applied, and maybe 2-3 weeks later, I was already signing a purchase agreement on the house.
Beautiful.
Yeah, man. So I mean, it's just it's
that's an ideal
steps,
scenario,
right? And so that's what I tell a lot of my buyers who come to me and they're like, "Hey, like we've never bought a house, we don't know what it looks like. Where do I start? Like what can I even do?" And they'll tell me, "I make this much. This is where my credit score is at. These are my student loans." And I'm not a professional, man. Like I can see it as an overall picture and say, "Okay, your credit's not too bad. Yeah, you might be ready," but I can never give that definite answer. So my thing is I always say, "Hey, go to a lender. They're gonna either tell you, yeah, you can do it," or they're gonna say, "Hey, here are some steps."
Yep.
And so
those steps that we frame as suggestions really are not suggestions. They are things that you need to do for your credit. And so being super direct with a borrower can sometimes scare them off, but it's necessary. Yeah. You can't sugarcoat anything. If they need to open up another line of credit to get their score up, or if they need to look at credit repair, these are real things that you got to look at. And it's painful. You got to rip the Band-Aid off at some point, though. You can't hide behind it for forever, and then you have kids, and 16 years has gone by, and now you're 60 and you have nothing to hand down to them. Right. This is how the very beginning of generational wealth is home ownership.
Wow.
That's everything. That's where it comes from. Almost every billionaire in this country, I would say, owns real estate. That's 100% fact. Millionaire, fact. Yeah. People that have 100,000 in the bank, they own real estate. Yeah. How far down do you trickle to where you find someone that doesn't own real estate that has a lot of money?
Right. A friend of mine actually just made a video on that, talking about how that's a way to build generational wealth. Yep. And I mean, she gave numbers and statistics and all that stuff that really broke it down to show like, hey, that is a great way to create wealth. And it doesn't start with a mansion.
No.
It doesn't start with a mansion. You don't need to go and buy a 6,000 square foot house and then that's going to help you build wealth. No, it could start just with a simple shack, right?
Simple shack, yeah. But hopefully it has a bathroom and a kitchen.
Yeah.
But we are talking about something that isn't just your first house. It may not be this thing with a pool and a grand entrance, but it's something that doesn't lose value. Yeah. There's something that you can take when you move away from it and apply it to your next bigger house.
Right.
And it's the only investment that puts a roof over your head. Stock options, do they put a roof over your head? No, they make you feel cool while you're looking at your iPhone until all of a sudden you put too much of it in crypto and now it's zero.
And now it's gone,
or
right?
whatever. That's a whole thing I don't understand, but someone else can do a podcast on that. I just wish that would be the first step, back to your question, is talk to a loan officer, of course. A realtor who will get you to a trusted loan officer that they've done business with before to run credit. You've got to rip the Band-Aid off, run credit.
Right.
You can't lead someone if you're blind.
Yeah.
And so that's the hardest part is people will ask, can we do a soft pull? Can we do a hard pull? Hard pull, rip the Band-Aid off, see where we're actually at. There might be things on there that you don't know about, but you can't fight something that you can't address.
Right,
So,
right.
Anyway, that's what I would
And
say.
it's painful, man. It's
Yeah.
painful when they open up that credit report and you start seeing things that you're just like, oh my God. It can
Yup.
be a little discouraging too, right? But yeah, it's just like you said. Yeah, it hurts at the beginning, but you know you gotta let the wound
You're
dry
like,
out
dang,
sometimes.
I
right?
owe $4,000 to Victoria's Secret. What has
How
been
did that
happening over
happen,
here?
right?
That added up
Right,
quickly.
man. Yeah, that's
Yep.
that's good. So what about interest rates? That's a huge thing. I hope I'm not. I mean, I know there's probably a lot that goes into that.
A ton.
I don't even know if you can even predict the future of what interest rates look like, right? I don't know that, but I mean, we're seeing. Would you say that they're high interest rates? Would you say they're starting to normalize?
I wish I could get Josh Sigmund and Dan Diepenhorst, who own Orange Mortgage, or our parent company, on here because they can talk about it endlessly. And these are some of the brightest guys.
Wow.
So having them on our side is something that, you know, getting that guidance from the inside when we try to give someone, hey, you should lock this week, you should lock today, you should wait. When we're giving that guidance, it's not blind. So we're trying to come from a place of overall market understanding with it.
Yeah.
And without peeling the layers of the onion back super far, as to what is an interest rate, and then we go back to what is money, and then what is work, what is time. Yeah. You can go back and peel that layer back as far as you want. The basics of it, interest rates are bought and sold on the open market, and investors are the ones that produce the drive for that or produce the demand for it. And it is kind of tied to the Fed. It's not direct, and I'm sure some lenders on there are going to come and decipher and depict this 800 different ways, and that's fine. I welcome it. But they control the overnight borrowing rate. So if they raise that 75 basis points, you would expect to see interest rates go up that same way. That is not what happened the other day. I can't stand the term unprecedented times any longer. If I see it on one more commercial, God, but it's unprecedented. I mean, they're announcing the rates are going to go up, and it went down.
Yeah.
How does that happen? Because it's already built into the market. All these investors have already put this thought, because they've announced we're going to have several more rate hikes, into the market. It's already priced into it. And when it came out that it wasn't as much as they were thinking, the market shrank back. And interest rates fell a little bit. So we're all trying to gamble. Right. We're all trying to predict, should I have my borrower locked this week? Should I not have my borrower locked this week? What about tomorrow? What about Monday? What's going to happen over the weekend? All of that is something that we don't want to stress the borrower out with. You want to have them have a fundamental understanding of it,
right,
but they need to trust you. They need to trust that this is what you do for a living and that you have a grasp on that. So getting that across to someone after you just analyzed their bank statements and pay stubs and got a quart of blood, probably a kidney, not both. We just need one because, we're not crazy.
But they took both your legs.
Yeah, but you're getting both legs. Those are gone. We need those. We need those for underwriting. But after that, they should trust you, and hopefully they do.
Yeah. So you use the term lock-in interest rates.
Yep.
You said that a few times. What are the advantages of locking in your interest rates? Are there any disadvantages to locking in your interest rates?
At some point, you're going to have to lock it in. So if you have a new build, like my house, what if it's not going to be done for 6 months?
Yeah.
We don't know what the market's going to do then. And what if your debt to income ratio is super high already? That's a huge gamble. You're about to go put a earnest money deposit on a house that, what if the rates are higher by then and you can't make it work? So you have an option to buy it and extend it. There's a cost to that. Nothing in the world is free, and to mitigate risk, that costs money.
Right.
So you can lock it out for longer and ride that out, and then you're immune to the sway, the back and forth of the market. Hopefully, labor supply, all my people with new builds out there right now, labor and supplies chain, what do they call that? Labor and supply chain
Man, I don't know if I've heard that one.
Mismanagement or disruption.
Disruption.
Yeah. So even there's a loan officer that works for us that's been under contract for several months for a new build.
Wow.
And she just got word, hey, it's actually not going to close for 4 more months.
Oh my goodness.
So what do you do? She starts looking at all her options. She's a loan officer, so she's like, the inside way of how to work this.
She's going home,
but you have to absolutely. She's immediately on the phone with her realtor. Like you have to do that, and so I don't blame her at all. I would be looking at. I can't just risk my entire future and a roof over my head over will this builder get this done on time. So that's where interest rate locking and extended locks can come in to mitigate that risk. Lock it out longer, lock in your debt to income ratio so that we know this loan is doable, barring you losing your job or something worse. So,
So locking in interest rates.
It reserves it off the market and says, this is mine.
And what's a good time frame that you can lock up to so many days, so many months?
I'll tell you, average typical is 30 days.
30 days.
That is what 90% of people are going to lock for.
Okay.
A 30-day lock. You can extend that if you need to, but the vast majority of people are going to do a 30-day window. And that gives time for appraisal to come in, the loan to go through underwriting, any repairs on the house to be made, and to close.
Okay.
So 30 days is typical. You can do 45. You can do 15.
Gotcha.
Different costs for each one of those. Anything worth having has a cost to it.
Yeah,
so
that's
a longer
right.
Lock
That's right.
Usually
That's
does
right.
have a cost to it.
That's right. And so you lock in your rate.
Yep.
And let's say it decreases 1/4%.
Okay.
Am I locked there? Can I do I have to stay there, or do I have to pay to unlock it and lock back at that quarter?
Every company is going to have their own take on that.
How do y'all do it at Orange?
So if it's going to be over half a point, that's something where we look at a rate lock and a renegotiation.
Okay.
So we're going to look at the fine print details of what does it cost, whether that's a business decision from us to renegotiate that lock at a lower rate if it comes in way like over half a point. That's
so every
generally
lender's,
the threshold.
every lender's going to be different.
Yep.
Every lender's different. So there's no right, wrong.
There's no wrong. Gotcha. Everyone's going to have their own policy on it, what they're willing to look at the bottom line for. Can we renegotiate this lock? So we talk about risk mitigation. That's the whole point of locking. This is your rate. We locked it in. Are we happy with it? Great. Let's move forward. You can jeopardize the entire transaction if you start getting a little bit too much back and forth. Like, as much as sometimes I would love to do a loan for someone that is like, hey, I just got locked in with another lender. I'm at 6%. Rates dropped. They're saying they can't lower it, because they may not have the same policy that we do.
Yeah.
Okay. I'd love to get you in at 5%, but you're 16 days into a 30-day contract. Is me pulling that loan over smart, or should you look at finishing the process with the lender that you're at and then refinance later whenever rates go back lower again, if they do? I think that would be something that I would look at doing.
Gotcha. So there's no right, no wrong answer. I think when I bought my house, I was able to lock in. I think it might have been like 2 months or something.
Good. 60 days.
Yep. I think that's what it was. I can't remember off the top of my head, but I was able to lock in for. I think it had to be longer than 30 days, and we delayed our house. Our house was delayed like 2 months building.
Your house was delayed 60 days?
Yeah, it was delayed like 2 months, man, and so it was a tough one for sure. But so
that happens, man. That absolutely happens.
So we talked about interest rates. We talked about that. It's just almost kind of hard to predict. We thought they were going up. They're actually coming down. But
risk mitigation.
So then let me ask you this, as from a lender perspective, right? Because as an agent, we're starting to see prices of houses not drop, but they're slowly just starting to, at this point, just kind of go up. We're still doing some over asks. It's not by 20, 30, 40 anymore, the way we were doing it, a few months ago.
Yeah.
Or even a year ago. It was ridiculous how much we had to go up. But we're not in that market where we're having to really, really go up anymore or give much more over ask. So you asked me, I'm gonna say right now, still a good time to buy, because from what I'm seeing is prices are still, as we give over ask offers, what happens to the market? It just gets more expensive. It gets more expensive. It gets more expensive.
Why I didn't go into the real estate agent path,
right.
Man. You guys work in a zone that is like all about negotiation and these other factors that go into it. I work with the cold hard numbers.
Right.
So you're seeing houses stay on the market longer. And
not too much longer. Not too much
longer.
Are
buyer concessions coming back? That's what they want to know.
That's a good one.
Are buyer concessions coming back to where we can get the veteran or an FHA buyer, a conventional, but anyone into a home with less money out of their own pocket? Maybe that's coming. Maybe it's already happening, and someone can chime in on the chat and let us know. I do have a question from Tiffany. Can you explain why home buyers get so much spam mail after closing and how they can protect themselves from scams or unnecessary purchases? God.
Because that comes from you guys,
Bro.
man. That spam ain't coming from me, that's for sure.
I cannot tell you I'm still getting spam. It's been 3 years. I'm still getting spam at my house. And some of it looks so legitimate that almost I am questioning, should I contact the Bexar County Assessor's District? Because it looks so legit.
Yeah.
And God.
No, yeah. The other day as well, we got some mail, and my wife just kind of puts it on the counter, and she's like, "Look over this. Like, this looks very important.
It looks legitimate."
And I'm just like, "No, it's not important." One thing I tell my buyers is, after you close, you get mail that you just let me know if it has anything to do with your house, has anything to do with taxes, anything like. Reach out to me, and we will figure out if it's legit or not legit, because I would say a good 85% of the mail we get, it's not even legit. The emails,
it's nuts, man.
But they make it to look like it's the real thing. It's crazy.
Yep.
It's crazy, man.
So there's only one place that I know to go online to try to prevent that's been effective for my borrowers, and that is optoutprescreen.com. So optoutprescreen.com is where, if I have my way with a buyer as far as how we're going to go through this pre-approval process, I have them do that before we even pull credit, 3 to 5 days prior, if they're not in a rush, because it's TransUnion, Equifax, and Experian, how they have a 5-year electronic opt-out to where you're not going to get spam from credit reporting agencies. If you have a profile with TransUnion, you go and you check your Credit Karma. When you get a mortgage pull, they're going to see that, and they're going to go, "Dang, CJ's shopping for a house? Let's offer CJ every line of credit we possibly can. And even though another lender pulled his credit, let's have 17 other lenders call CJ and tell him that we need to also pull his credit." So that is the only way to prevent that. Is optoutprescreen.com should be a part of every lender's initial phone call. Can I have your permission to opt you out? Or here's the link. Can you opt yourself out?
Gotcha.
To not have that happen. Unfortunately, when you record with the county, there are people that are going to find ways to get that information and send you stuff. The only thing that we can do is send it to your realtor, send it to your lender if you want to know whether it's legit or not. That would be my way to do it.
Yeah, that's actually good. I actually didn't know that, man. That's good information right there.
Yeah. Josh Wineland, I see you watching. I can't wait for your comments. Going to come make fun of me for everything on here. Absolutely. Y'all know Josh Wineland is a realtor that I worked with in Arizona. And I don't know if you've seen in my backyard, I made an extension on my porch and posted a photo of it. Took me forever, like 2 days to do. He sends me a photo. He's like, "Hey, your back right brick isn't level." Thanks, Josh. Cool. Got it. Another thing, man, on that Tiffany asked about, there is a bill in Washington. I don't know the exact specifics on that bill, but it is about trigger leads. The whole term that Tiffany was talking about, like what's the spam mail, happens throughout the entire process, not just after closing.
Yeah.
It is a trigger lead that what I just talked about, how in my theory or in my scenario that you are shopping and you had your mortgage, your credit score pulled, it's to stop that. I don't get overly political, but if I ever were to vote, I would vote for that law to go through and make trigger leads completely illegal, because it's completely confusing, especially a first-time home borrower who doesn't know what they're looking at, what they're getting called from. Someone's saying they need to do this, that, or the other. It must be from the loan company. No, it's someone from a call center across the world or across the country.
Yeah, it's all these VAs, the virtual assistants, man. That they just like, some dude just hires them, and they're just making all these calls. And
absolutely.
So, I mean, does it make sense to buy right now from a mortgage perspective, from a lending perspective?
You got the deep ones today. Okay. In 2007, I'm sure there were still realtors and lenders out there saying, yes, absolutely, it's time to buy. But that is not what I'm doing here by saying, yes, it's still a good time to buy, because it is. For you, depending on your own specific set of financial circumstances. So 2007, when people were still answering that question, trying to get people to buy, is completely different than where we are today.
Right.
We're not in a situation where these mortgages are just someone writing down, I made $100,000 last year, and okay, great, certify it right here. Here's your home loan. Of course that collapsed. How could that on this planet not collapse?
Yeah.
It had to come to an end. So these mortgages are underwritten, which some of my borrowers can attest to, or any borrower out there recently. Yeah, we got to have a lot of documents, like we said, and your legs and kidney. But the reason for that is to make sure that you have the ability to repay on a mortgage. It's not just because we're jerks. It's because we don't want to put anyone in a financial position that they cannot make that mortgage payment.
Right.
That's the worst case scenario. So all of this is for a good reason, to establish credit, income, and assets.
Right.
So whether it's a good time to buy or not is always going to be up to your own individual set of circumstances. If you have the money and you have the credit and you have the income, absolutely.
Yeah,
There's 7.5 billion people on this planet. Out of 7.5 billion people, how many live in America? 320 million? Someone fact check me. There's not more land being created until Elon Musk can develop a spaceship to take half of us to Mars and somehow colonize it. We have a limited amount of land on this planet.
Yeah.
So whether it's a good time to buy or not, that's only time is going to be the ultimate judge of that. And the answer is almost always yes, because we're not creating more land.
Right.
For every person out there that's a baby boomer, this is kind of a morbid topic and not one that I wanted to go into, but not that you asked me to. All right, we have someone that is retirement age or a little bit past it. They no longer can they can't get out of that house, refinance out, or find a way to get out and downsize, because everything has gone up so much that they no longer can do it. So they're stuck in that house until the day they die. It's unfortunate. It's morbid. But what happens whenever that person passes away? They now leave enough money, equity, to 3 children. So one house goes on the market, and now the demand just went to 3 families from that one person or couple, and now there's the demand for 3. One house went on the market, there's demand for 3. Multiply that across all of America, you're going to have a nonstop demand for houses that we already are short on. I think in the millions. I'm sure there's a realtor, or you can let me know, what's our national deficit for amount of houses that we actually need versus the amount of houses that we have in this country.
There's a big one, I'll tell you that.
Yeah.
Just in San Antonio alone, San Antonio alone, we got more people moving into San Antonio where we live than there are houses, and so that's why the market is still insane. And so as long as I mean, and these aren't like facts, right? But this is kind of the way I see it, right? When people ask me about the housing market, it's like people are going to keep moving over here, and then and until the inventory can catch up to the amount of people moving here, I mean, the prices are we're still in a supply and demand thing. Like, there's not enough supply, and there's still a demand. Interest rates are, coming, higher, right? I don't know if would you consider them high interest rates? Would you just normal?
Not historically, no. I mean, we got used to an unnaturally low interest rate market for the last couple of years. A million things go into that.
And Josh said we are 5 million short.
5 million short.
Yeah, that's big, man.
See,
but you were saying, sorry, I just wanted to.
No, that's good.
We're still on that.
5 million houses short in this country.
That's crazy.
So yeah, is it a good time to buy or not? There are already not enough homes, especially in San Antonio. I mean, obviously the market's gonna shift up and down, but we are anchored by military bases here. There's gonna never be an endless sea of people coming and going.
Right.
So it's a stabilized, anchored market that, especially here, if you can't afford it. Why do you think that they make it so easy for you to go to the front office at your apartment complex and they're handing you light bulbs? Oh, did you need some doggy bags?
Here you go.
Oh, hey, Baxter, here's a treat.
Right.
Oh, did you need an air filter? I got a free air filter for you.
No, man.
Free.
They'll even go and install that stuff for you.
Yeah, because you're making someone else rich.
Yeah.
You are paying the vast majority, especially the ones I work for. of property management companies, the owner of that property has a mortgage on that apartment complex.
Yeah.
So yeah, they're going to hire someone to be very happy, hand you a cookie, and hand you an air filter,
Yeah.
and get you to sign your lease for another year so they can take your money.
100%. 100%.
Obviously.
Yeah, I mean,
Of course.
I would do that too.
That's human nature, man.
You
That's
know-
capitalism. That's what we all do.
Right.
Um,
But so I mean, so interest rates are still,
Historically low.
they're still at the historical low.
Yeah. I mean,
Okay.
it went up to what, 19% at some point in time? Now I
man.
need to grab. Now I need sources here.
Now you need sources.
Yeah, I need sources, man, because you'll get called out by other loan officers for that for sure.
Yeah, I know.
They'll be
I'm
like,
sure.
"Did you say that it was 12% in 1984? Actually, the average rate was 14% in 1985.
I believe
so you're
it.
wrong, Vance.
I believe it. That's why I don't
That's
want
what
to
we do. We fight guidelines all day.
That's why I don't want to give any
Yeah.
hard numbers either, because
Yeah.
all
Sorry.
all my realtor friends, they're gonna be trying to.
Josh ain't scared.
Yeah,
he'll
they're
throw
gonna-
numbers out there all
He'll
day.
put numbers
because
on.
he's in Arizona. He doesn't have to deal with Texas.
Oh man.
Well, he still does.
Yeah, man.
man.
Yeah, I mean, I think it's still a good time.
What's
to
the
buy.
next one? Give me another hot one, man. Let's go.
Let's see. And you've answered quite a bit of questions within like what we've been talking about.
Good. Because my tank is almost empty, man. Whew, God.
I mean,
See, Ann watching.
You touched.
Love you, Anna.
You touched on a whole lot of stuff that we already. You know what? Let's. We're talking about apartment complexes and,
Yep.
and how we rent. Okay, so scenario, right? I go and I'm going to renew my lease again, right?
Mm-hmm.
A 12-month lease. I'm in month 1, and I'm watching a live with CJ and Vance right now, and now I'm convinced that let me see if I'm ready, if it's something I can do. How does that work? I know broken leases go on your credit. Does that affect?
That's something we
buying?
see a lot. So I do see a lot of broken leases, and they will put that on your credit for a very long time, whether it's legit or not sometimes, like charging you $400 for a little scratch on the wall.
Yeah.
That's something where we have credit repair step in. But you're talking about, I'm a buyer. I just re-signed my lease. I don't know that I'm a buyer yet, but I think I'm a buyer.
Yeah.
I think I want to buy a house now. Okay. You got a year left on your lease. That's where we get molecular. We're going to dive into the details of your lease and find out, can we break it for a cost of 1 month, 2 months, 3 months? Do we have to find a subletter? Are we even ready to buy? So it may take a year for credit repair for some people
Yeah.
that have gone through a rough divorce or have other life circumstances that is going to take time for that to repair. And then we time that to where it ends right at the end of your lease. We'll have you go month to month for a couple months. But there's a lot of times where you can find an out. The worst case scenario is, you do. Sometimes you have to choose between the lesser of two evils.
Yeah.
And if that evil is, I have to break my apartment lease to buy this house, I would morally never say you should do that. I would definitely not say that on a Facebook Live. That's morally wrong to leave a lease that you signed for, to put a roof and security financially and physically around your house because you signed a lease with an apartment complex. Definitely don't do that.
Dude, that's awesome. I see a question popped up there. It's not popping up here on mine.
Yeah, who knows, man?
But-
I can barely see it there. Jason, my boss, is letting me know that our normal inventory is 5 to 6 months. We are currently at 1.6. Those are national numbers.
Wow.
So, man, I knew realtors and everyone would have a lot to say about the inventory thing.
Yeah, for
So
sure.
5 to 6, that's what I've always heard is a healthy balance.
Yeah.
You have, when we talk about months of inventory, we're at 1 to 6 or 1.6 months of inventory. That's still low. So yeah, if you can afford it, it's not a crazy bidding war. Are you seeing bidding wars still happening?
Oh no, it's
Or
not
is
as
it
bad.
slowed
It's
down?
not as bad as it used to be. I know when I was when houses and we were bidding and I would call the agent and try to
Yep.
butter the selling agent up. What can I do if I come at this? Am I competitive?
Yeah.
Because they can't tell you much.
Yeah.
So I'm just like trying to butter them up and see what I can do. And there's times where I have to come back and tell my client, hey, we got to go 25, 30 over.
You're like,
Over.
hey, my name is CJ. I'm representing a client that's interested in your house. By the way, I already found your car and I washed it outside and I
Right,
picked up
it's
your dry
ready to
cleaning.
go.
Would you please consider my borrower's offer? By
Yeah.
the way, he has down payment assistance, and we're going to need some concessions.
Oh man, and that's the tough part right
That's where
there.
you got to
And
have a
so
realtor
I
willing to
think
fight.
these last few months, or even year and a half, it's
Yep.
really been a market for people with money in the bank, with good credit,
unfortunately.
and because they wanna see proof of funds. They want to see, hey, you're gonna put down $20,000-$30,000 on this house. I want to see you at least have 50, 60 in the bank in case something
the
falls
proof
through.
of funds thing has been real. So you used to not have to do that, where you have someone say, I will cover a gap in my appraisal. If it appraises low, I will cover the difference, $15,000. Now we have sellers going, hey, that's a really cool thought. Can you prove it to me on paper? Can you send me a redacted bank statement from that buyer? And it puts us in a position where we're like, all right, got to get permission from the buyer to do that, and I'll redact it. What if he doesn't have it yet? What if I know it's coming from him selling his boat, which his wife never wanted him to buy in the first place, but
Yeah.
he's got to sell that boat to buy this house. All right, so am I supposed to tell the seller, well, we will have $15,000, I promise you. It's a 2006
No, yeah.
wakeboard boat. We're going to have $15,000.
Yeah.
No, they're going to the next offer. So
It's a huge thing, and so I realized that there's times where I had to get creative as an agent, like to win offers.
what's the most creative thing you've ever done? I
man.
want to hear it, man. Or can it not be put on a live? No, I'm just kidding.
No, okay, I'll share one. So we were putting in an offer on this house. My buyer had already lost like 3 or 4 offers, and so they come across this house and they just love the house. And I'm like, man, we got to win this. And so I always call, and I probably shouldn't even be saying this on live, right? Which they all do. I mean, I know most agents do that, but sellers' motives, that's big to me. Sellers' motives. What are the sellers' motives? Because if I can tug at their heart, like we're winning, we're doing this. So I'll figure out sellers' motives and then figure out where I need to come in on an offer so I can, craft my offer to what it needs to be. So it turns out that the seller had this exotic cat, dude, like not heard of. I don't even know what it was. And my buyer liked cats. They loved cats, and so
You tried to take the cat from that seller?
no. Well. So the seller was actually overseas.
Okay.
So the sellers was overseas, and they were needing a lease back, like a I can't even remember. I think it was maybe like a 2-month lease back. So I need a lease back, and so when I find, well, the seller's overseas, why do you need a lease back? Is it because you need help moving? Like, I'll always call and I just ask all those questions, right? Because if it's the moving aspect of it, then I'll get movers in there if you're okay with it and help you get all your stuff into a store. Shoot, I'll even pay for the storage for 2 months, like, right? So we're gonna get creative here. So I call and it's, well, she has this exotic cat, and she's not coming back for 2 more months. And so she has nowhere, like, I can't just take this to like a daycare because of the rear of this cat or whatever this, like, so I talked to my seller or my buyer, and I'm like, hey, this is the situation. You love cats,
You made the buyer take a cat, didn't you?
So I said, so in my offer, we crafted it, dude. And I didn't even go, dude, I came in at asking price, and they had over ask offers. Came in at asking price and said, hey, I will watch your cat for 3 months. Put it in writing.
No kidding.
Won the offer. Didn't even have to go over ask. Like,
Emotions, man.
yeah.
See,
but this cat meant everything, dude. Like, this cat meant everything to the seller. And so it's like, if you can just like tug at that, you know? And so that's, dude.
Well, it worked, man.
We did it, man. And so we got the house, and they watched the cat for 2 months, and the cat's gone. But we were in that situation where you just have to just think of something, like get creative, like one way or another to win. And so it's definitely been stressful. It's been a lot of fun. A lot of fun, right? There's nights where I'm up late. And
maybe not for everyone.
I'm up late just trying to figure out what we're gonna do. But yeah,
man, dude.
You have a lot of fans. Everybody, I love Vance. I love Vance.
They're a bunch of liars. I paid them all to say that.
Oh man, but yeah,
nah, man. Dude, one last thing that I'd bring up: if you are gonna buy, or you're a first-time home buyer thinking about it, is you've got to choose a team that you trust. Find a lender and a realtor that communicate. Communication is the hardest, most talked about, hardest to do part of buying a house.
Yep.
You don't want to be left in the dark about wondering what is going on. Does your lender communicate with your realtor? Realtor with lender, both of them with the seller. Everyone's got to be on the same page.
Yeah.
Title company, there's no less than probably 16 people that are going to be involved in the purchase of your house.
Right.
And so it is a little bit like herding cats. Sometimes you're trying to get a bunch of cats to all move in the same direction, which is, by the way, why I don't believe in conspiracy theories. I don't believe in any one of the conspiracy theories out there because of real estate and lending. I've tried to get just 3 people to all move in the same direction
It doesn't
to
happen.
close on this house, and it is impossible. I almost need the National Guard to make it happen.
Wow.
And so I don't believe that there's a conspiracy or Illuminati of a bunch of people all on the same page. Not buying it.
Yeah,
Nope.
I definitely agree with you. Having a team of people,
Yeah.
For me, it's crucial to have specifically a lender that is going to be available weekends at 8:00.
You guys love to do real estate late
absolutely,
at night, man.
Absolutely,
You guys love it.
absolutely, right. And so we go see houses, and it's time to put in an offer. And so with the way the market's been, like, there's deadlines.
I'm aware of how y'all operate. This is why I haven't had a date in like 2 years, man.
It's our fault, right?
It's your fault. It's your fault.
Oh man, but
Because you guys love it, but you
it's-
got to be available to do that. There's no weekend off.
Right, and
You go
there's-
take a random Tuesday.
Yeah,
off if you
yeah.
need it.
And there's times where I'm calling the lender and, hey, I need you to run these specific numbers so
What do they say?
I can do. I've been blessed to work with great lenders
Good.
that pick the phone up.
Thank God.
They answer. They run me numbers.
Because that's someone's house and livelihood.
Yeah,
on the line.
absolutely. Because I come back with you're gonna run me numbers at this.
Good.
Tell me what I got to put down at this. Tell me what my monthly payment's gonna be.
Yep.
I mean, for these 3 numbers,
Everything.
and so I get to go and present those to my buyers. And when you have someone that is going to really have
on the ball.
right, because the lenders deal with buyers often, but there's a time probably where you kind of step back a little bit,
Mm-hmm.
and that's when you give them that pre-approval. You say this is where you're at, and they shop sometimes for 2,
Oh, yeah.
3, 4, 5, 6 weeks, and then you hear back from them, and so.
Then that's when I find out they bought a new car and they changed jobs.
Oh
Yeah.
man, don't do that, right?
Yeah,
or,
don't do that.
Or do that.
If I had to choose between doing that and not doing that, I'd say don't do that.
What if
you're a teacher, don't get a job as an airline pilot or something in the middle of your
Don't
pre-approval
change.
process.
Don't change.
Keep it the same.
we're talking about it's a real conversation to have
Yeah.
because I think again by the grace of God I've not ran into this, but I've heard friends of mine who said, hey, I didn't know I couldn't buy a car, or I couldn't take out a new line of credit, or I mean
Yep.
if they charge up a credit card, it could be as simple as just pay down that credit card, and then
It could be, yeah. So credit's going to be monitored from the time you go under contract. We're
Okay.
going to pull credit, most companies across the board, and so we're all using the same guidelines, 120 days from the time that you pulled credit.
Okay.
If you don't open up any new credit, excellent. If we have to pull credit again because that closing date's going to be past that, we're going to have to take a fresh look at it.
Man.
And then credit is monitored once you're under contract. So we'll know if you've done it. Don't try to hide anything. If I could tell you any one piece of advice, tell your lender. Because if we go to closing and we see paper tags on your brand new Mercedes
Oh, no.
while you're at the closing table, and then we get a notification that something popped up, that's not going to be a great day for everybody. Tell your lender. Just tell
Yeah.
the truth so that we can figure out how to work it in or what to do.
Right.
Is just don't
It's
hide
'cause,
it.
some buyers, they kind of to like a certain extent sometimes kind of see you guys as like bad guys.
I know.
Like, hey, I can
Overcoming
only
that
tell
is
them,
hard.
I can only give them so much information, because if I give them way too much, they're not gonna. But it
Yep.
all comes out, right? Underwriters, man, they're legit.
And that
Right.
is their entire job, man.
They're legit, and I've experienced it buying a house. I've experienced underwriting with my buyers,
Mm-hmm.
and they're just like, man, I totally even forgot that. How come my loan officer didn't tell me about this, right? And so maybe you can touch on that a little bit, because I've been asked that question quite a bit of times. It's like,
should I tell my lender this? Should I tell him?
Well, one, they should, right? But there's
But-
times where they say, hey, well, my lender didn't say anything, and now the underwriter's saying this.
Yep. That. Man, when I was starting in this business, that happened a lot. That's going to happen to almost until you've done a few loans. It's going to happen. The job of the loan officer is to catch it before it gets to underwriting and come up with a plan. So when we're asking you all these really personal questions, what are these deposits? What is this? What's that? What's everything under the sun? It's not because we're jerks. It's because we know that is going to get brought up during the underwriting process.
Yeah.
When if we set it up correctly, those questions don't come up. We already have letters of explanation. It gets the stamp of approval from the underwriter. If we did not spend enough time scrutinizing your file before giving you that pre-approval to shop, it's going to come up later.
Yeah.
That's a fine balance. Some people, like myself, want to go shop as soon as possible. Hey, you got my credit score? I'm just going to go look at these houses with CJ. Oh, okay, cool. I still haven't given them bank statements. I still haven't done all this other work that's going to raise those questions that have to be solved.
Right.
So sometimes it's a balance. Hey, you call me on a weekend for a pre-approval. That's great. But we still need to do the work behind it. Like, we need an hour and a half to look at this file and dive through credit, dive through everything, verify documents, and issue a true pre-approval.
Gotcha.
So that you're not left in the lurch. Well, this underwriter was a jerk and found this out. Well, we should have figured that out beforehand.
But it's not being a jerk, though.
No,
it's not being a jerk. You're protecting. They're
that's
ultimately they're protecting the buyer.
They don't realize it, but yes.
They're like, hey, like, I know you probably think you can afford it with this, but I'm telling you can't.
That is exactly the point, man. Yes.
Because most people, they live way above their means, right?
Yep.
And so, I mean, it's a real thing. And so they're looking at this they want to make sure, like, you're good. It's not even like we don't want to lend you
We
the
have
money.
guidelines, but those guidelines are there for a reason. But you're right. The goal from it is to make sure that 2007, 2008 doesn't happen again. And as much as I hate to admit that a government program, guidelines, everything that they're doing has worked, it largely has worked. It has worked. We're not in a gigantic recession right now with everything selling off and the whole world coming down because it affects everything. Real estate is tied into our 401k. It's tied into every sector of our economy almost.
Right.
So these underwriting rules that have been in place since then have worked. That's why these mortgages, there's some defaults because of COVID and stuff, but it is nowhere near catastrophic. These mortgages have been underwritten to these guidelines to where we know most likely they are going to make these mortgage payments, and it's still a secure form of investment.
Right.
To buy real estate investment trust, mortgage-backed securities. That's, other than a treasury yield or a bond, I mean, that's a stable investment.
And really, you're their best friend and they don't know it.
Yeah.
Right.
I like that. I like the way you phrase that. I'll take it.
Yeah, I mean, because that's what it is. That's what it is. You
got to make sure we don't, just because you can do something doesn't mean you should. And so once we find out we can, then we'll find out if we should.
Right. So I have a car, right?
Yep.
My car payment, let's say, is what's the average? Like $700 or something like that. Like an average car payment.
I have seen car payments in the $1,000 range.
So when you have seen that, like, do you go and you're like, well, what car is this? And then you find out it's like a Focus or something. Like,
I don't judge a borrower at all.
I know, but have you seen something like that? I'm not asking, for your judgment. Yes. I'm just saying you've seen some crazy stuff.
There are some crazy stuff where people have to make a choice, man. Should I have a car to get to work to afford the job so that I can make the car payment? Or do I not get the car? I can't go to work. Now I can't pay rent.
Right.
Not everyone has the luxury of saying, I'm going to work from home. What if you change oil for a living at Meineke? What if you make good money doing it, but you have to drive there every day?
Yeah.
How are you supposed to get to work without taking out that loan to get the car?
Yeah.
Well, Dave Ramsey would say you ride your bicycle and you figure it out until you have enough money to buy a Honda Civic and make it to work.
Yeah.
The reality is most people are going to finance a car.
Right.
And there's
absolutely.
a lot of companies out there, subprime lending, that are going to look and go, well, you may not be able to afford a car from Toyota or their lenders, but use ours. Don't look at the 21% interest rate.
Yeah.
And we'll get you into this car.
Yeah. Okay.
That happens, man. It's a real thing.
So going back to the question, though, that's great, though.
I'm good at sidetracking.
No, that's not even a sidetrack. I actually was the one who sidetracked to ask you that question. But what I was going to ask was, let's say a car payment $700.
Yep.
And I want a new car.
Okay.
And I'm in the process of buying a house. Been pre-approved already. Can I go and get another car if the payment's $700? I know that's a tough question. It
needs to be looked at carefully by the lender.
Okay.
Because just because the payment is the same, you're going to cancel out that old line of credit and it's gonna keep some of it, but it's by and large gonna lose that positive history that you have. That open line of credit is going to be paid off, and a new balance is going to show up. So you're paying off 20,000, you're adding 40, so that doesn't get looked at from like a human being going, oh, they made a bad decision. That's thrown into an automated underwriting system.
Okay.
Fannie Mae using Desktop Underwriter, Freddie Mac using Loan Prospector.
And who's Fannie, who's Freddie? Let's talk.
Oh, God.
Right. You don't have to go into detail, but just for the people who don't know.
Yeah.
What is that?
Fannie Mae and Freddie Mac are two organizations that are pretty similar to each other, that are going to be holding every loan to the same standard, that it's backed by Freddie Mae or Freddie Mac and Fannie Mae. And so if we meet these guidelines through them and through their underwriting systems, then it's a backed loan that has better value for resale. Every loan is getting sold.
Right.
So whenever, unless you do a portfolio loan, there's always caveats. I say words like always and never, but I almost always never mean always or never. But by and large, it's going to get sold to Ginnie Mae, VA, or Fannie Mae, Freddie Mac. So if we conform to these guidelines, all these underwriting things, and it meets that, then it's a more stable and insurable loan, and we're going to make it.
Right, because it's just going to get sold.
Because it's sellable.
So
we
these
refill
are just,
our bank, and then we can keep it. It helps keep interest rates low.
So just for lack of for lack of better, or what, it's just they're just two maybe banks or two people that are going to end up. They're going to look at it. They're going to say, "Hey, I want to buy this loan," or it's going to come to me, or
sort of.
Okay,
we need to honestly do an entire podcast on that.
Let's do it.
Okay.
Yeah, we'll do it.
We'll do it next Wednesday.
We'll do it. We'll do it.
We'll go into the that is a we need to peel back the layers of the onion.
Right.
On that,
right.
Because those terms, Fed, Fannie, Freddie.
They're scary, man.
FHA, VA, Ginnie Mae.
That's why I asked you to unpack
what are all
that.
these things? Because we need to unpack it.
Because you're talking about Freddie, Fannie. I'm like,
as if they're my best friends.
Right. I'm like, dude,
that's
what I mean. They sound like people. I mean,
we need to unpack it.
They're kind of almost like people, but so it's not a good idea, right? Because we're not looking when we look at debt to income. Are we looking at it? From what perspective are we looking at it then? Are we looking at it from payments? Or are we looking at it from like...
We're looking at payments.
Okay.
But also into that equation
is the credit.
Is balances.
Gotcha.
So it's taken into consideration your payment to balance, like your ratios as to how much you're borrowing and how much your balances are, is factored in. But what's more directly factored that I can see, a lender can see, is your monthly payments on that debt.
Gotcha.
So that is what's physically calculated into your debt to income ratio, but the balances do still matter on a credit report.
Okay. So don't go buy a car unless you talk
Please refrain.
Yeah. And I've heard that. It sounds sounds silly, right? Like
all the time, man.
But people just they just think, well, it's the same payment. They're not thinking.
I don't need to tell my loan officer, don't worry about that. I'm just going to go buy a new car. I'm getting a Tesla.
Teslas. Man.
I have one borrower out there right now. I wonder if he's watching this Facebook Live.
And
but,
are they?
We're not going to call him out.
But they're looking at getting a Tesla.
Hey,
they got
you know
one?
what? They don't. We'll see. I don't want to ask the question.
You don't want to ask the question.
I don't want to ask him.
You'll find out.
We'll probably find out.
Okay.
Yeah.
Man, dude.
Sometimes it's better to not ask the question.
Yeah. No, for sure, man. Well, Vance, dude, I appreciate you joining me, and
absolutely,
man. It's been fun. We got a lot of questions.
We're gonna do round two.
Man, I had a whole list of questions, but through our conversations, they essentially just got all answered. But I'm curious to see what other people online probably want to unpack when it comes to mortgage, because that's such a huge topic. Like we just kind of just like threw it out there and said, what are just some random questions you guys may have, and people send questions and people are curious, and so I'd be real curious on what you guys have online and what you guys have questions on. Vance, let's
do it, man.
He wants to come, and
if I don't know, I will get my golden doodle to come on the show and he'll answer it.
Dude, I have a golden doodle too.
I love it, man.
He's not as big. This sounds crazy. He's not as big as I want him to be.
God, mine's gigantic.
He's
too big.
He's like 55 pounds maybe.
Mine's 104.
You see, that's what I'm talking about, man. Like that's like a healthy. That's a healthy dude. When I